Good evening, everybody. It's currently Saturday night, 11:30. We are doing the last week weekly recap, the week from the 13th of June up to the 18th of June. We start by going over where do we have left last week. We had the CPI data showing a higher than expected inflation. We saw a huge profit taking at the end of the week after failing to break above 1902 key level. We saw profit taking even up to 1876 key level. And we will see this week starts, of course, on Monday, 14th. What are we expecting from this week? We have retail sales that will show if the CPI of the previous week correlates to a higher consumer spending or not. And we'll have the crucial Federal Reserve decision, the FOMC press conference, and the interest rate decision on Wednesday. So we are not expecting a lot of volume in the previous day, so Monday and Tuesday. We will just see the reactions at the key levels and price sensitivity area. Let's see how it's going on Monday, from Monday on. As usual, we're using a 15 minutes time frame to see the reaction at the key levels. It's currently Monday morning, Monday London session. I might even pop up this. Okay, looks nice. So we see in which session we are currently. Currently London session. Reaction at key level. We dip a little bit below. On Monday we were expecting, as I said, safe sells below 1855 and only safe buys above 1876. We see below 1855 we already had a nice drop with safe sells that will have worked out. Of course, you have to take profits because it's not yet. We don't have any fundamental confirm of the USD strength. This was just a huge take profit from last week. We see a pretty huge bounce, reaction at key levels, and basically the day is over. And we go on Tuesday morning after some ranging during the night. We're not expecting much since the following day we have the FOMC, like I said. We are expecting ranging market during London and New York. We have some data report, which is the retail sales. As I said, if the retail sales show that the consumers are spending more, we can see safe sales. If we see with the retail sales that prices, that the inflation is actually affecting the economy, as I said, because the CPI data is indicating a higher inflation that is actually affecting the economy, then we can see a pretty nice bounce in gold. Let's see how it works out. We have to remember that the following day we have the FOMC interest rate decision, which everybody is waiting for. Everybody has the eyes on it. We start London. We see our prices currently ranging between these key levels. Not much volume. We just have in New York and in New York stock exchange volume and volatility, but we are just moving in a big range. Reaction at the key level, and that's it. That's it for Tuesday. And we go then on Wednesday, the big day, where in the night we will have the FOMC data. Let's go on Wednesday. Of course, FOMC day. We are expecting the interest rate decision. We are expecting not to raise them to raise the interest rates straight away, but we are expecting talks about tapering, about raising the rates, about a change in the monetary policy from the Fed. We are expecting to keep it low. A big change, of course, will make USD strong. Everybody will have the eyes on the FOMC press conference. So we were already looking at if there were some dovish comments from the Fed. We were expecting a bounce up in the dollar, in the gold, and if the hawkish Fed and the conference, we were expecting USD dollar strength. We'll see how it will work out, and we'll go through each. Of course, we're not expecting any volume prior, any big move prior to the big data. Okay, we got the release. So we are going to see what happened during this conference. We already set in the 2 p.m. Eastern, 8 p.m. Central European data hours. We're going to look at the actual headlines from the Fed. So we saw that at 2 p.m. we saw the data, and the Fed decided to keep, as expected, the rate at 0.25. But all the eyes were on the actual press conference. So we have the release of this speech. Fed says it will maintain accommodative policy until inflation runs moderately above for some time, so that inflation averages 2% over time. Longer-term inflation expectation remain well anchored at 2%. What does it mean? Powell will explain it later during the press conference. If before the assume this yellow line is the 2% of the inflation, the goal of the Fed was to bounce up and down with the upper level being 2%, so 1.5 to 1.5 to 1.5 in this level. They are now saying, okay, the Fed wants to be in the 2% range, but ranging from 1.8 above 3%, 1.5, 3%, having the 2% as an average. So they are being optimistic about this higher inflation, higher than previous, higher than since before 2008, because they are now sort of shifting the mentality, saying, okay, even before we were doing like this, with being the 2% the top of the range, we want the 2% to be in the middle of the range. So we are going to expect, we have to be get used to having the inflation higher than 2%, as well as below, because the 2% will be in the middle. Fed says in the case of economy activity, employment have strengthened amid progress on COVID vaccinations. Of course, we are seeing some economic activity progresses and employment thanks to the COVID fear shedding out. They will maintain the Fed funds rate, so quantitative easing, until the labor market has reached maximum employment and inflation has risen to 2%. So we are not ready yet. If you were looking to the analysis, this is like economy is not ready yet. We have not reached economy full pandemic levels. This is what kind of caught me off. We weren't expecting such an action that we will see. We were expecting with these headlines, gold would rally bullish, because they're saying we are not going anytime soon to stop stimulating the economy, stop buying bonds and EFTs and giving stimulus. So this was bullish for gold, but not always is the a single headline, or is the headline that market follows? Is the market that decide where to go? So if they say that this speech and their upcoming press conference is optimistic, they will trust it. So we already saw the dollar currency index and the 10-year yields rising, and we were waiting for, of course, the half an hour later speech directly from Powell. It starts here. So we saw. Let's go to that time. So we saw the big spec down with this pitch, 100 pips that it could have been caught only with sell limits, not actually, because it did us with these headlines. It could have done this bounce, this liquidity grab up to 1836, and then bounce back up with the real trend. So it's not something that you enter. It's risky. We have now the end of the move, since we now starts the press conference. So Powell starts with the headlines. Powell says policy will continue to deliver powerful support to the economy, which is bullish for gold. Actually, I mean, it's not ready yet. Recovery is incomplete. Inflation will likely remain elevated in coming months before moderating as increased. Factors weighing of employment should wane in coming months. So he's expecting the labor market to grow in the upcoming months. Bottleneck effects have been larger than anticipated. Okay. Inflation will likely remain elevated in coming months. It's the same. Longer term inflation expectation appear broadly consistent with Fed goal. Even if inflation could turn out to be higher, this is consistent with the Fed goals. Like I said, they are expecting now not to have 2% as the top, but have 2% in the middle of the range. They are starting to give some optimistic sentiment. Say, okay, even if the inflation is high, no problem. We are going to have the tools, and this all will be expected. Inflation could turn out to be higher and more persistent. This is just a speech which will bring the price to range. We'll see about that concept later. New streams for risk. Okay. Powell says it will be prepared to adjust policy if inflation is moved too high. They have the tools. Adjust policy means they have the tools. They are still expecting quantitative easing to be strong. Lift off when the economy is strong. Fed will do everything we can to support the economy for as long as it takes. Optimistic. Provide advance notice before changing asset. Okay, they will give a lot of notice before starting to tapering. Optimistic. We are on a path. It's really optimistic. So this speech is kind of mixed neutral, because it's saying mixed sentiment news sentences. One is optimistic for gold, one is optimistic for dollar. So it's not something that you should actually trade yet, but after this speech, high inflation, some reversal, some reversal in price increases. He was saying that the problem of the price increase is the supply, this disruption, the supply chain disruption, labor supply. So it's something that is really easily removable. Fed forecasts for inflation are really in the goals, so is everything expected. expected. See, we expect to see increases in supply, so inflation will move down. Of course, if the supply is low and the demand is high, we know is an economy theory, the price will increase. So if the supply comes back, we will have a decrease in the price. Talking says this was the talking about meeting. So they were talking about tapering. So it's not coming yet, but it's giving a lot of optimism to dollar. So we see inflation expectation, blah, blah, blah. It's very, 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 very optimistic. Give advance notice. Reverse repo facility is doing his job. We're not concerned. Needs to be careful. Okay. Really, really optimistic data. Let's see how it moved during these next few days. This is still, remember, during the speech. Very, very very ranging. And then after the speech finishes, we have the, as Jivan told us, the fact that, okay, during the speech, Powell can say a single word, wrong word, and the price can spike up or down. So the investor and the smart money wait for the end of the speech to, okay, so let's digest what the Fed said. What is the sentiment? So he said this. It didn't say this. So what is the overall sentiment? Okay, USD is strong. Why? The Fed is being really optimistic and is starting to talk about tapering, raising interest rates, and etc. Seeing the economy as strong. So USD strong, let's sell. And we have a strong move thanks to exactly this overall sentiment. So we go, of course, during the night we have less volume, and we go now on Thursday morning. We can see the analysis. Now it was a little bit shady for me to make the analysis. What are we expecting? This concept is pricing in the USD strength, because did actually Fed said we are rising interest rates, we are stopping the QE? No, this is all greed pricing in the USD strength from the future. So keep in mind that we can have some headlines, something that says, okay, we're not ready yet. The Fed was wrong. Price can spike up, but we were expecting only pullbacks to further sells on gold. So now I'm missing. I will have to put some key levels. I will put them for the next week. But as we see, we saw pullback. 1820. I don't know if there's some key level here. Doesn't matter. Pullback. USD strength again. Pullback. Little bit consolidation. Creating lower lows. Consolidation. Pullback. And the trend continues. Now we are doing the night, of course, as a stress in the Asian. And we are going on Friday morning. We have a pullback up to 1895. We were expecting Friday, after all this move, we were expecting a much slower Friday. I didn't actually expect price to, after this move, pull back, I didn't expect the price to continue directly down. since it was a Friday, I was expecting price investors to take some profits, but it did a pullback. But then the price investors were still being greedy, and as we will see, the price will indeed move down, creating lower lows as like the day before, even below. So guys, this was the weekly recap. We saw a big FOMC report, something